Thank you for turning up. I'm Andrew Peaty. I'm an innovation partner, one of the people that is a sort of talent scout for the Defence and Security Accelerator. I'm going to run through quickly what DASA does, and then hopefully you will be able to get onto the meat of the presentations later. So DASA finds and funds exploitable innovation to support UK defence and security. We also will try and support the UK prosperity, as it says on our mission statement. The key word on this statement is exploitable. We are looking to ideas that we can exploit throughout the work. So if it's not exploitable, then we will basically not be interested in it. And it's got to have a UK government defence and security end user. Next slide, please. We have a large number of customers in defence and security and broad-reaching in what technologies and services we actually provide. So we've gone from anti-counterfeiting, working for the Bank of England. We've done skills retention and recruitment for the MOD, and we've done things like tackling knife crime for the Home Office. So we have a wide range of customers and a wide range of areas that could be interested in. Slide, please. So why would you actually want to work with us? We will work with anybody with a good idea. The only people we rule out is nationals from non-friendly nations. But apart from that, pretty much anybody else, whether academics, small, medium enterprises, or large companies, we are interested in talking to them. We provide 100% funding, so no match funding is required. We have rapid contracting. The reason we can do that is it's not a grant, but if you signed up to our terms and conditions, which are quite benevolent, you have written half the contract, and then your proposal is the remainder of it. So that is the actual contract. We do not require any equity, and we do not take your intellectual property. The intellectual property stays with you. For government, we embrace risk. Obviously, we don't want to fail, but we accept the fact that innovation can fail, and we are focused on the effect. So it's not how you achieve the effect, it's the effect you achieve that's important. And so as a result, we don't really mind whether you use a science, technology, or service. You have an opportunity to work with government stakeholders. We try and network you with other members of government, both the science side with DSTL and also with end users in frontline commands or the police forces and things like that. We advise you to put an innovation outline in prior to bid. There are some competitions which actually require you to do that, but we advise it anyway. That is a short form way of actually you setting out your idea so people can have a look at it and decide whether or not it's got a good or a bad chance of success to save you time. And on the whole, it's about 3 to 4 months to decision. Next slide, please. This is obviously always going to be slightly out of date. This is up until December. We've agreed funding for almost 1,000 projects with an investment of about £117 million of other people's money. As you can see, if you look at the bubbles, the other government departments, which is security funding, has about £41 million of that 170. So it is less funding has gone to security than the defence generally. The success rates is probably the most important thing people are interested in. If you go for an open call, which I'll explain what it is later, you've got to have a 1 in 5 chance of success. And if you go for a theme competition, there's about 1 in 4 chance of success. We do not expect our funding to be cut for the next year, and we anticipate there'll be about a 60 million pot for next year's funding. Next slide, please. So I'll go through quickly what the opportunities are. There are theme competitions, market explorations, an open call, and the defence and innovation loans via access to mentoring and finance. Next slide, please. A theme competition is where a customer has come to us with a problem set that they have. They have a number of challenges which they want to be solved, and they are very keen to actually have them solved. They have put aside a significant amount of funding for a number of solutions, and it will all be in a competition document on our side. So you'll have the end users and their experts in the room with a budget spent burning a hole in their pocket. So that's why you've got a higher chance of success with theme competitions. Next slide, please. A market exploration is where a customer has come to us with a general problem area. They have a short brief of what is required, but there is no immediate funding behind that. However, it is possible if they get enough ideas coming in through the door, they will then go on to a competition. So there is a competition document explaining what they want, and we would advise people to put in their ideas because it's a very simple method of going forward, very short form, with no commitment behind putting in any ideas. And you have a chance of actually pushing the market exploration into a competition. Always, you're putting your ideas in front of the customer, which is always a good thing. Next slide, please. Then we have the open call. The open call, where emerging innovations are allowed, is for early stage funding. So we don't have them for open call at the moment, but if they do come in, or for innovation focus areas, they will be no funding limit, but for an early stage TRL, so 2 to 4. Most proposals will come in between 50 and 100k, although you can obviously ask for more. And we'd expect your projects to last about 3 to 10 months. A rapid impact is where we expect you to end in a trial or demo, which is about TRL 6 or 7. We expect you to be about 3 years until exploitation, and there to be no funding limit. Most proposals we expect to come in between £100,000 and £350,000, but obviously you can ask for more than that. An innovation focus area is where we have an area of interest for a customer with funding available, and it's possible to get initial feedback possible. The innovation focus area is a bit between a pure open call and a themed competition. So please check the website for current IFIs. Next slide, please. How do you get involved? Well, first of all, check the website. You can join our mailing list, or you can talk to your innovation partner. As you can see from the map, innovation partners are regionally based throughout the UK and have some knowledge about what is in their regional area. And myself being one of the regional partners, we can actually deal with it. Next slide, please. So if you contact us using those details, either on the email or the options, or go onto our website, please. Next slide, please. I'll now pass over to Tracy North, who's our Access to Mentoring Finance partner, who will explain how the innovation loans work.
Morning, everyone. I'm Tracy North. I'm one of the Access to Mentoring and Finance partners here at DASA. And our role is to very much support the business behind the innovation, to help the business grow and reach commercialisation if that's what they're looking to do with their innovation. One of the ways that we're doing this is through the Defence Innovation Loans that I'm going to talk to you about today. I'm just going to give a brief overview, and then Hamaxi and Nigel from Innovate UK will go into a little bit more depth. So next slide, please. So who can apply? Firstly, you must be a UK registered SME. Unlike the calls that Andrew has just talked you through, for this one you need to be a UK registered SME, and we go off the company's house definition of this, i.e. 250 employees or less. You must intend to exploit the results of your innovation in the UK, or if you're manufacturing in the UK but exploiting overseas, it needs to make a significant and positive impact on the UK economy and or productivity. These loans are aimed at the more mature TRL levels, so your innovation must be at TRL Technology Readiness Level 6 or above, and this is to ensure that the solution can be commercialised within the timescales of the loan. And there must clearly be an evidence of defence need for this innovative solution. Being at TRL 6, we expect that as you've progressed through those stages, you've already identified potential end users of your technology. Your proposal should present a viable opportunity for growth, a level of innovation that necessitates public sector investment, and has the right team and approach behind it to be successful. Again, Innovate will go into more details on that later on the call. You must be able to show that the company will be able to pay interest each quarter during the initial stages of the loan, and at commercialisation be able to make capital repayments and therefore pay the loan on time. And most importantly, that you need public funding, so i.e. that you can't go down some of the traditional finance routes for various reasons, including lack of security and insufficient revenue. Again, Innovate will cover that in more details. Next slide, please. So at the moment for this call, we've got two tracks of funding. The Defence Innovation Fund has got up to £5 million to put into this pot, and it's open to innovative ideas to improve the defence of the UK across the board. And within that, we've got a more specific track where the funds are coming from the Army, from their Army Innovation Fund. Again, we've got up to £5 million available for this. And this is open more specifically to innovations which align with the Army's priority areas. Some of these are listed below, but there's more on the website. But in general, Army Industrial Engagement Framework, decision support, directed energy weapons, human performance enhancement, information advantage, robotics and autonomous systems. But if you think of the Army in many ways as like a microcosm of society at large, it's got many challenges, logistic challenges similar to those in retail and distribution companies, data exploitation challenges similar to large technology companies, preparation of delivering food similar to large restaurant chains. And the Army has a workforce to be trained, developed and cared for in similar ways to that of any other organisation. So it really is quite a wide remit, but I'd encourage you to read the details on the website for more information. Next slide, please. So I'm just going to cover briefly about how to put your application in and some of the costs from DASA's point of view. Next slide, please. So you may have noticed on the website we've recently had a little bit of a change to the application process, whereas previously we were running in cycles similar to the open calls that we have. We've moved for a pilot phase into a cycle where innovators can apply in at any time and expect an initial outcome response within 7 weeks. So as soon as your application is submitted, both for our part and Innovate UK's part, then we will start the assessment stage rather than waiting till the end of the cycle and starting everybody together. The initial outcome is our assessment. I'll go into a few more details about what we assess in a minute, and Innovate's initial checks. They do initial check to make sure everything's there and some initial checks on that. And then if successful for both of those, it would then progress to a more in-depth analysis. This pilot's running until the 16th of March, at which point we will review the whole process and then make a decision about how it will run going forward. So just to be clear, Innovate will undertake an initial credit triage and DASA will assess your innovation. They will then Innovate, if you're successful at that point, Innovate will take a more in-depth analysis and do the anti-money laundering checks, PEP, KYC, and issue all the loan paperwork if successful for the application. If you're unsuccessful at any point, then feedback will be provided. And if you are successful, a monitoring officer will be appointed by Innovate to monitor the project and review the quarterly financial information. Next slide, please. So a little bit more in depth about the application process. What I'd suggest you do is read all the instructions thoroughly before you start, because there's information on our application form, but there's also information on Innovate's form that needs completing. And I suggest if you open the DASA application form first, from the DASA competition document, under our application form, under step 3, section E, there's asks you for Innovate UK's reference number, and it provides a link there through to Innovate UK's application forms. What I'd suggest you do is get both of these open at the same time, because there are some areas that we ask for the information on both, just so we've got clarity, and it'll save you a bit of time because you'll probably be able to copy and paste where the similar questions are asked. So Innovate will assess the viability of the business and its ability to generate income in the future to enable the loan to be repaid successfully. Whereas at DASA, we're looking at 3 things on the innovation from our point of view. They come under the headings of desirable, feasible and viable. And we'll carry out our innovation based on your answers within that. On the form, it asks you to choose which tranche of funding you think your application is relevant to, as per my previous slide about the defence side, or more specifically the Army. So on the desirability, we're asking you to tell us who'd benefit from your innovation, and looking for evidence of a sponsor or end user buy-in that you've already engaged at this stage. And if you've got any contacts already in that arena, I strongly suggest that you include those on your application so that we can see that there's that end user pull coming through for your innovation. Explain the business need, the technological challenge or market opportunity that's driving that innovation, and describe your impact of your innovation in defence terms of performance, time or cost. For example, we're looking for significant step changes that your innovation will bring. Example, it'd be 5 times faster while being net zero. That sort of evidence is what we're looking for. On the feasibility side, we're looking for you to explain what testing you've already done to get it to the technology readiness level 6, and what further testing may be required, perhaps in a more relevant environment. And more importantly, how you then propose to bring this innovation through to commercialisation, if that's the route that you're going to go down, or whether it's a licensing route, how you're going to undertake that and who you would be doing that through. Explain how your innovation is different to any alternative approaches that already exist out there, and if you need to provide evidence of your team's relevant experience, that would be really useful so we can see how it fits into the overall picture, including any subcontractors you may use for the commercialisation of your innovation. From the viability point of view, we're looking for you to have evidence that your idea can be delivered within the project scope and timelines and has realistic prospects of being commercialised beyond that. And we're looking for you to show a clear route to commercial success with a focus on growth or scale up. So under your project delivery costs, we're looking for full details in there of how and what you will deliver, and that needs to match up to your loan drawdowns that you'll put on the Innovate UK application. And there's also a box for you to give us a drawdown schedule for to break it down so we've got an overall view of what you're going to spend and when, and the overall spend. Next slide, please. Yeah, I thought that was it. Just so you know, there'll be details at the end of the webinar, but what I am offering is for people to book in for a one-to-one call with me. If you've got any more in-depth questions that don't get answered at the end of the call, or you just want an individual chat, that'll be on the 4th of February. And say details will be available on the website and at the end of the slides. So now I'm going to hand over to Nigel Walker and Hamaxi Bart from Innovate UK to talk you through the application process from their side. Thank you.
Thanks very much, Tracy. Thank you. Yes, good morning, everyone. I'm Hamaxi Bart. I'm the programme lead for the Innovation Loans team, and Nigel Walker, who's also going to be doing some of the presentations. He's the Deputy Director for Lending and Investor Partnerships. It's really fabulous to be working with DASA on the defence innovation loans, and Tracy's sort of gone through the process for the project side. Nigel and I are going to talk you through the business and financial side. So firstly, let me tell you a little bit about the innovation loans, and just have the next slide, please. Thank you. Okay, so what the innovation loans, they are really there for funding for the later stage R&D, and for businesses who've got that clear route to commercial success. As mentioned earlier, around that sort of TRL 6. And that sort of fits in with where the project needs to be. We look at single applications. We can't, innovation loans aren't open to collaborations. So it will be an application in your own right. The loans are between, I'm sorry, I'm just going to have to amend that. I've just realised I put 100,000 to 1.6 million. The loans are actually between 250,000 and 1.6 million. We're just changing the criteria for some of our other innovation loans, so that's a bit of an oversight on mine. So I'll just reiterate that the minimum amount is 250,000. What we'll do is we will actually look at up to 100% of eligible project costs for funding. So if it relates to the R&D, then they can be considered as part of the loan. Interest rate of 7.4%, and before you gasp and say, gosh, that's really, really high, really there's a structure there that will really help the company in those early days. There's a repayment period of up to 7 years. And the way that's structured is that we have 3 periods. We have an availability period, an extension period, and a repayment period. So that availability period can be up to 2 years. This is when, as a business, you'll be completing your R&D activity. You want to be able to draw down on that funding as you do that activity, and it needs paying for. You can draw down quarterly in advance, and you only pay interest at 3.7% on the amount that you've drawn down, with the remaining, 3.7% deferred to the repayment period. And then the extension period, at this point, you will have completed all your R&D activity, and you're looking to basically take that product to market. And this can be up to 2 years. And I say up to because if you're starting to generate... Oops, sorry, if people can just mute their microphones. Thank you. So sorry, yeah, the extension period can be up to 2 years, but if you're starting to generate revenue earlier, then that extension period can be a lot shorter. And then that takes us on to the repayment period. This is really where full repayment of the capital, the interest, the outstanding amount on the loan will really start. I forgot to mention that on the extension period, once again, you only pay interest at the lower rate at 3.7% on what you've drawn down, and the other 3.7 is deferred to the repayment period. So I hope that makes sense. So availability and extension, interest accrues at 3.7% on the amount that you've drawn down. The remaining 3.7 is deferred to the repayment period, and at that point you start paying 7.4% on the full amount. As long as those periods total 7 years, that's accessible. So you could have 2 years for R&D activity. You might only need a year to get to that commercialisation. And in which case you could then have 4 years to repay your loan. So 7 years in total. We don't ask for security, there's no arrangement fees, but with regard to, we don't do personal guarantees, so we do take security in the way of a mortgage debenture, which is really a fixed and floating charge over the assets of the business. However, we do recognise that either now or at some point in the future, the business may need senior secured commercial debt. And if that's the case, we'll be prepared to enter into a deed of priority and subordinate our debt. So this can be taken into consideration. Also, throughout the period of the loan, there will be certain covenants that we will ask you to meet. The first one is a liquidity ratio. And this is required right the way throughout the loan. And what that basically means is that your current assets need to exceed your current liabilities by 10%. It basically tells us that you can cover the interest in the short term, i.e. when you're just looking at the availability in the extension period. And then once you get into that repayment period, we ask you to meet a debt service coverage ratio of 1.2 times. So what this does, it measures the company's ability to use its operating income to repay its debt obligations. And in addition to that, we will ask for quarterly management accounts, we'll ask for audited annual accounts, and Tracy's already mentioned the monitoring officer that's allocated to work with you through that period. So just go on to the next slide, please. Okay, so what are we looking at for the defence innovation loans? So I think some of the project side, Tracy's really covered around the type of projects and businesses that they're looking for. So, you know, they've got to be innovative. You've got to evidence that defence need for the innovation solution. It needs to be later stage R&D, experimental development, looking at making that positive and significant impact on UK defence. as a business, you need to be growth orientated, scaling really rather than starting out, and that you can prove that there is that credit constraint there. Okay, so I've talked about the structure of the loan, so we'll just move on to the next slide. Okay, so just really wanted to touch on what we're looking at and what we mean by late stage R&D. Obviously, the key eligibility criteria is that it needs to be sort of defence and army related. But really, all what we mean by late stage R&D is any of the activities required to take a proof of concept or a prototype through to commercial application. So ultimately, delivering those new products, processes, technologies, and getting those services to market. And this slide just sort of gives you really high level what some of the things that you might be already involved with and that count as late stage R&D. Next slide, please. Okay, so Tracy's already mentioned about the dates. So it's an always open competition with final deadlines being 16th of March. I've put in a link to the competition and basically, you know, what we're saying is as soon as you're ready to apply, then get your application through. Next slide, please. Okay, I'm going to let Nigel do these exciting slides around subsidy control because he explains them so much better than I do. Nigel, over to you.
Thank you. So because the innovation loan offers a rate of interest that is below what would be considered a market rate for a highly risky, relatively early stage business, because we don't charge any fees, this is a form of subsidy from the UK. Or if you're in Northern Ireland or have activities that relate to Northern Ireland, then it would be considered to be state aid. The typical rules mean that the subsidy that we offer is the equivalent of a grant, but it's not the amount of funding that we provide, it's the benefit inherent in the difference between a market rate of interest or a reference rate and that rate of interest that we actually charge. So that differential over the period of the loan is the subsidy that we're providing, or the equivalent of a grant. And that subsidy needs to be below 45% of the costs that you incur, and we're fairly sure that that will always be the case. But it's important that you recognise that this is a form of subsidy offered by the UK to you. If you happen to be based in Northern Ireland, or if the activities that you're undertaking affect the trade of goods and possibly electricity between Northern Ireland and the UK in the EU, then it would be considered to be state aid under the old European framework, and there is a specific requirement around a test called an undertaking in difficulty. That test would apply to businesses that are more than 3 years old, and if you're more than 3 years old and more than half of your subscribed share capital has disappeared because of previous accumulated losses, then you would not be eligible. There are certain exemptions around businesses that have become undertakings in difficulty since the start of the pandemic, effectively. We'll ask for evidence of that. So that undertaking in difficulty test is a specific test required for those businesses that may be applying for state aid because of their position in relation to the Northern Ireland Protocol. For other businesses, there isn't that specific test, but we will still look at the adequacy of capitalization of your business to make sure that you are suitable to take on a loan, and we will apply that test in that way. So next slide, please. And I'll hand back to Himatsi.
Thanks very much, Nigel. Thank you. Okay, so I would suggest that you think of the application process in 3 parts. There's the part that Tracy's already spoken about, and that's the project proposal and the project costs. Where Innovate UK gets involved is with the business and financial side. So here we're asking you questions about the business, and that's the business, the management team. And if you think about it, that the DASA, the project proposal, the questions are focused very much on the project. So it might just help you to differentiate when you're responding to the questions and you think, oh, I've already answered that in the project part, or I've already answered that in the business and financial questions. But think of it as two very separate areas. And the third part is the actual financial spreadsheet. So that's a really, really important area where you can give us your historical financial information as well as your forecast figures. And the reason that forecast is so important is that we're looking at making a decision on what the company is going to do in the future. So just going through the application process, if you just move on to the next slide, please. So this is really what you will see when you first go into the actual application, and you click on the link, takes you to the competition document, and then you click on it, and there's one bit that refers to the DASA part, and then there's the innovation loan request application, and it says just click on there. Next slide, please. So this is what the next page will look like around the business information and the financial spreadsheet. What we have done is that we've put together a document, a help guide, to take you through each of the steps on the questionnaire and the survey. So please, download that from here. And also, when you go through the financial submission, you're not able to pass different pieces to different parts of the organisation for them to complete different parts of it. So what you can do is you can download an example sort of PDF, which will show you what the questions are. And if you do need other people to work on it, then that's a good start. And then further down on there is, actually, if we just go on to the next slide before we talk about the financial information. So just to give you a guide on the type of questions that we're asking you to look at. As I said earlier, this is very much focused on your business and your management team. So there's oh gosh, I can't remember, probably about 75 or so questions. It sounds like a lot. Some are very quick radio buttons, some are just information about the company, putting in numbers. But then these questions that you can see here are the ones where we want you to provide us with some really, really good background information. And basically just to remember that we're not mind readers. We can only assess your application on the information that you provide to us. So we want a business overview. What is your business? What are your core product offerings? What does your value proposition look like? And how will the business be impacted by this project? You may be running other projects as well, so tell us a little bit about those as well. Obviously, we want to know about the loan amount and the period that you require. And that you'll be asked those sort of the questions as you go through. We really want to know about the management team. What experience do they have? What's the management structure? Who are the founders? Looking at employee numbers, that sort of thing as well. Also important is what have you done in the past if the business has been trading for a while. If not, what's happening now? What are you forecasting for the future? Looking at your customer base, looking at the various different sales channels, domestic and international. And also, really, how is this impacting on the defence side of things as well? Product development, past, current, forecast stages of development of your technology, plans for future development, where that's going to be utilised within the cycle for the defence and the army. And then we go into the finance side. So, you know, what is the financial situation for the business and why do you need public funding? And we ask about the growth challenges. So these are the growth challenges for the business and how are you going to mitigate them? Within the project application, you'll be asked about the challenges and risks for the project, but this is very much focused on your business. Next slide, please. So mentioned about the third part of the business, and that's really the business financial spreadsheet. So once again, there is a guide that can take you through step by step of completing that financial spreadsheet. It is an Excel spreadsheet, and I will say when you first look at it, it might appear quite daunting. But actually, if you start working through it logically, things around the loan and the repayments are all pre-calculated and are all calculated and then pre-populated on the key pages. Next slide, please. Yeah, so I just mentioned about the slide, sorry, about being able to download the spreadsheet and the guide as well from there. Next slide, please. Nigel, shall I, do you want to go through the financial spreadsheet?
Sure. So in the financial side of things, we're interested in both your historic information and forecast information for the full period of the loan. If your business has been in existence for 3 years or more, then we'd like to see the actual results of your business for all of those 3 years. If your business is younger than that, then please provide us what information you have that's available. The forecast must cover the full period of the loan. So if you're asking for a loan that's going to cover the full 7 years, for example, we would expect you to show those forecasts for the full 7 years. And that's not just so that we can do the analysis and look at those covenant ratios, for example, but also we think that it's really important that you should do that, that you should be able to have the confidence that applying for a loan is sensible for your business, that it matches your financial forecast for that period. We're interested in your profit and loss account because that obviously shows your operating activity. We're also interested in the balance sheet because we're a lender. We're interested in that liquidity position, for example, around current assets and current liabilities. We're interested in other long-term liabilities that you may have in your balance sheet, the fixed assets that you may have. And we're particularly interested also in the capital structure of your business, how much share capital you have, your accumulated profit and loss, or perhaps your accumulated losses if you've been very much investing in R&D, as many businesses do. So the profit and loss account is important to us, and the balance sheet is important to us. And if you move on to the next slide, please, the cash flow is also really, really important. The old mantra that cash is king applies in this. So again, we'd be looking to see those actual historic cash flows as well as the forecast cash flows. As Himaxi says, a lot of this information will be pre-populated as you go through the different parts of the spreadsheet, as we'll show in a minute. But we're interested in seeing how, for example, your turnover, your revenues translates actually into cash that comes in. So looking at that translation from sales, taking away the debtors that are outstanding at the end of the year where you won't yet have received the cash in, and seeing therefore the cash that you receive from debtors during the course of each of the years. Similarly for the cost of sales, taking into account your creditor positions, your inventory positions, or any stocks that you're holding or work in progress. Interested in looking at other payments that you're making, for example, in purchasing fixed assets, any other income or sources of funding that you're receiving. So perhaps you're receiving income from turnover. You may also be receiving non-commercial income, such as income from grant funding, and you may be generating cash inflows through raising additional equity, through taking on other loans. So all of those are very important to show that the cash position that your business has in relation to the loan that you're seeking. Next slide, please. So the way in which you go through and complete this business financial spreadsheet, it's set up with a number of tabs. The first tab is about the business and financial spreadsheet, and the starting point is to put in certainly your application number, your company name, but the date of your year end and the date when you would like the loan to start. If you put those in, then the spreadsheet will automatically recognize where you are in the year, what your financial year is, what the historic and what the future years will be. So that's a really important first step, is to put in your expected loan start date. It has to be in that boring format of day / month / year. You then select your year end date from a drop down, and if you input those correctly, then the template will automatically populate the financial years for your forecasts and historic information. Next slide, please. When I'm looking at this spreadsheet, I'm thinking about it. I've put in that basic information of where does my year fit. Then the next step maybe to work is to move to the Repayment Calculator tab. There you can put in how much you want to borrow, when you want to borrow that funding, and what the period of your loan should be. So as Hamaxi has told you, that availability period when you're drawing down funds quarterly in advance to fund your R&D, that can be up to 8 quarters or 2 years. That extension period when you're no longer doing the R&D but you're not yet fully commercial, that can be up to 2 years. You input that period in quarters, and then the repayment period, which can be up to 5 years, but the overall period of the loan, as Hamaxi have said, can only be up to 7 years. So you input that data, you input the amount that you would expect to draw down each quarter within that availability period. You put in the total amount of loan that you wish to borrow, you put in the amount of the cost of your project, and the loan cannot exceed the cost of your project, but you may not wish to borrow all the money for your project, so you have to put that in. And if you put all that information in, then the loan amounts, the interest payments will all be auto-populated from the spreadsheet and put into the balance sheet, profit and loss and cash flow forecast in tab 1. So the next slide, please. So here's an example of how the auto calculation works. In this example that I showed you there, it was a £1.25 million loan over 5.5 years. And this has done all the calculations based on the amount that you would be drawing down according to your schedule, showing how much interest is paid in the quarters, how much interest is deferred during that availability and extension period, and what the payments will be on a level basis in the repayment period. And those amounts of interest paid, interest deferred, go into the profit and loss, the cash flow, the balance sheet, along with the principal outstanding. And this shows how those calculators work through and will help you to see key issues around affordability, so that you can see how much you will be paying each quarter, and you can judge from your cash flows whether that's the right thing for your business. And we will use that in our analysis of the suitability of your business to take on a loan. Next page, please. So as I've said, this information will auto-populate the balance sheet and with the amount of the innovation loan that's outstanding. And the next page, please. It will also show that interest that's chargeable in each financial year will go into the profit and loss account. Next slide, please. And the cash flows will show up in the cash flow forecast. So the cash payments of interest during the availability, extension and repayment periods, the loan drawdowns in each of those years, and then the repayments over time as well. So key elements of the information around the loan will be automatically populated into the spreadsheet to make it easier for you. Next slide, please. The next thing that I suggest that people start looking at is their revenues. We've developed a fairly simple optional template for looking at the sales and the cost of sales that you would have. So if you've got different products or services, you've got different costs of those, different sales prices for those, you can input those. You can input also the volumes that you expect to generate in terms of sales of products or services or subscriptions based on your business model, and that will help to complete the revenue part of the financial template. So moving on, one more slide, please. So as I said, you can put in the volume of sales. That might be individual units if you're making a piece of equipment. It might be the number of subscribers if you have a software as a service business model, and the calculations will go through. If you show the next slide, please, to show the turnover and the cost of sales, and that will then generate the information in the profit and loss account in tab 1 of the financial spreadsheet. This is optional. If you choose not to use our suggested template, then we would very much suggest that you show your own template. You can add new tabs to the business financial spreadsheet. We would certainly want you to show how you've generated your turnover and cost of sales assumptions in order that we can make that judgment on the suitability of your business to take on the loan. So next slide, please. And as you can see here, based on that simple worked example, the turnover has been shown in the financial forecast, the cost of sales has been shown there, the innovation loan interest is already there, so you're starting to see already the earnings before interest and tax and the net profit based on that information. You may need to put in additional information around other income that you're receiving, grants that you're receiving, for example, other interest that you might be paying if you have other debt outstanding, depreciation around your fixed asset base, any tax, it might be tax credit reclaims, might be tax payments, that you would start to complete the picture in the profit and loss account. Next slide, please. Can you move on one slide, please? Thanks. The information that you then need to complete in the rest of the balance sheet and the cash flow forecast is around your fixed assets, your debtors. We think it very, very likely that most organizations that are in a business-to-business environment, or indeed in a business-to-consumer environment, are likely not to receive all their cash from sales in that year. There will be some credit that you offer, or maybe you'll receive payments in advance and you need to account for that through your creditor position. Those things are really important to input. They help to demonstrate the liquidity of your business, or lack of liquidity, which is not so good. And we'd also want to see you putting in your capital position, your subscribed share capital, your profit and loss, and making sure that those all reconcile together. I'm an accountant. I like to see balance sheets that balance, for example, and it's a cash flow figure that's the same in the balance sheet as it is in the cash flow forecast. So next slide, please. And then this would be the cash flow forecast. You'd need to input other loans or equity that you might receive, other costs that you have beyond the straightforward cost of sales around admin and other costs, making sure that what's in the cash flow reconciles to what's in the profit and loss account, assets that you're purchasing, how that ties in with the fixed assets in your balance sheet, for example, and showing the really important opening and closing cash balances that are critical for us to consider in a loan for you. Next slide, please. There are some simple automatic checks that are carried out. These are for information purposes only. The spreadsheet will check whether your balance sheet balances. I'll frown if I see a balance sheet that doesn't balance because it tells me something hasn't gone right. I would strongly encourage you to get a proper qualified accountant to help you with this if you don't have a CFO in your business already. It will check around this undertakings in difficulty test. That's advisory only, and it will check whether the cash matches, which again is important. It will highlight what the liquidity ratio is. As Himaxi said, it needs to be at least 1.1 times throughout the period, and it'll show debt service coverage ratio so that in the repayment period, you'll need to be above that key 1.2 times so that you have more earnings before interest, tax, depreciation and amortization in order to cover the debt service obligations of interest that you would have to pay and the repayments you would have to make on our loan and on any other loan. So that's an important test of affordability in the future. The gross grant equivalent from a subsidy compliance point of view will also be tested. We think that's almost certain to be fine at being below 45%. There are tabs in the spreadsheet that will show you the gory details of subsidy compliance if you wish, but they are all auto-calculated. Next slide, please.
Thanks, Andrew. If we can just move on to the next slide. Thank you. Okay, so here I'm just going to go through the process that your application will go through once you've submitted it. So as you're aware, there's two parts to the actual application. There's the project part, and then there's the business and financial bit. So once we receive your application, the project side will be looked at by DASA, and Innovate UK will look at the business and financial information. Initially, we will check and do a scope or eligibility check. Basically, it's high-level check to make sure that you're meeting the scope guidelines and the eligibility guidelines, that the loan amount that you're applying for is correct within the criteria, that your project is within the sort of the criteria that we're looking for. So they're sent through to the relevant teams, and looking at the project bit, that will go for innovation assessment, and DASA will use their independent assessors to do that. Innovate UK, that part of your application goes through what we call a credit triage, and Tracy touched on it at the beginning of her application. So what that means is that our credit team will do some high-level checks, making sure that there's sort of no red flags, no obvious reasons why the loan application should not proceed. And then we will bring together the credit team's decisions, recommendations, as well as the DASA assessors, and we will decide upon which applications are suitable to take forward for a full credit assessment, and whether the company is then suitable to take on that loan. And if you're unsuccessful at that point, you'll be advised and some feedback sent to you through DASA. And those applications that move forward to detailed credit analysis, you'll be contacted by one of our credit specialists, and it will probably mean a sort of a conversation, hour-long conversation, to find out a little bit more about your application. It's not necessarily in every single case, but generally that's the process that we like to follow. So that will go through a real detailed full assessment, and the credit specialist's decision or recommendation will go then forward to a credit committee. Nigel's part of that credit committee, as are a number of our senior members. And the credit committee will either be straightforward and will be happy to recommend and go forward with the credit specialist's decision. It might well be that it comes through as wants a little bit more information. So in which case they may ask for a management presentation. So this will be your opportunity to undertake a presentation to the credit committee, answer any of their questions, and to basically convince them that you're right and suitable to take on a loan. If you're successful, then the next step will be around the due diligence, and Innovate UK and our operations team will send out the loan agreement letter and advise you of all the next steps. So things around the due diligence, the KYC and those sort of things. Nigel, was there anything that you wanted to add?
Not at this point, because we're going to have a whole bunch of slides on the approach to credit anyway.
Yes, we do. So if we just come to the next slide, please. Thank you. We always use this slide when it comes to, you know, when we had the sort of the monthly, quarterly cycles for what we at Innovate call competitions. And we always find that literally the majority of the applications get submitted at the very, very last minute. We're hoping that that's not going to be the case with this cycle because the competition's open, always open. So, you know, please use that time wisely and get your applications through as soon as possible, really. As we've said that in the past, but hopefully the timing is right for you. And don't leave it till, you know, 11 a.m. before on the 16th of March, because you know what, issues can arise, technical issues. So yeah, just use that time wisely. So if we go on to the next slide, please. Okay, and the one after. And Nigel, shall I hand over to you?
Sure. So as Himaxi has said there, she set out in that sort of flow chart, there are two stages effectively. The first part is the proposal for your project suitably innovative, meeting the needs of the Defence Innovation Loans Programme that's looked at by DASA, and there's an initial review of, is this business likely to be suitable for a loan? If the view is that it meets both of those criteria, then it would move forward to the next stage of detailed assessment from a credit point of view, but it may be that you don't progress to the next stage, in which case you'll be notified of your application unfortunately being declined. Once you move into that second stage, there will be more detailed review. As Himaxi said, will be directly in contact with you as an applicant, and the view from the credit committee will then be taken as to whether to actually make a loan offer or not. So the next slide, please. So when we're looking at suitability of a business to take on a loan, we want to look at your ability to make the repayments in the future and to pay interest during the period. And there will be a range of positions that a company might be in. There may be some applicants who are super duper, really creditworthy and perfectly able to access funding, and who can't demonstrate that there's a need for public sector intervention, that maybe you're just looking to take on this loan rather than a commercial loan because you think that it's slightly cheaper. That's not the best use of public money, and so we might determine that actually you can't prove the need and you may be too good from a credit point of view for this particular intervention. The other end of the spectrum may be that your business really doesn't have enough capital to support the overall business. It may not have an adequate funding strategy that relies on you know, a big chunk of money coming in the future to fill a big hole, and there's no feasible or plausible plan that's been set out in the application to show how that's going to happen. It may be that the time to generate revenues just takes too long, and that by the time we get to the repayment period, for example, that your business isn't expecting to be generating positive earnings that are necessary to meet that debt service coverage ratio, or it may be that break even isn't going to happen in time. And it may be that your business as a proposal doesn't have enough liquidity, doesn't have enough cash on its balance sheet looking forward, such that there's no real wiggle room. So that might be the sort of thing that we think is not suitable for a loan. We think that most applications that we receive are somewhere in the middle there. So we want you to be able to display that ability to be suitable to take on a loan and to show that you need to have the funding from the public sector. Next slide, please. So when we do the initial credit review, as the project is being considered by DASA, as we look at things from an initial point of view, from a credit point of view, we'll look at that business survey that you completed, the financial submission that you've put in. We'll look at some external information from due dil, for example. We will look at the high level information around are the directors that you're showing in your application the same as the directors that are registered at Companies House? Have you got more a full board of directors rather than it just being a single founder, a sole director company, which doesn't really imply good governance? And the credit committee will be asked to determine whether the application from a credit point of view is to be declined because there are credit concerns that we simply don't think that you're going to be able to overcome. Maybe it's going to be recommended. We think that there may be some credit concerns initially, but we believe that they're entirely manageable, or that it's marginal, that there is marginal on the recommend side or on the decline side. And what we will try to do is, in conjunction with DASA, try to be biased towards the innovation side of things, so that a marginal recommend needs to be innovative, yes. A marginal decline, with sort of quite concerned from a credit point of view, but if it's considered to be highly innovative, really suitable from a project point of view, then we'll consider taking it forward for further detailed credit analysis in order to see whether there really is something there that can be managed and can end up being considered to be suitable from a lending point of view. But if something isn't there from a project point of view, according to DASA, then the credit doesn't really matter. It's not good enough from a project point of view, or not suitable from a project point of view. Equally, if something is a decline from a credit point of view, then no matter how innovative or suitable from a DASA point of view, if it's not suitable for a loan, then the application would be declined. Next slide, please. And then if you can skip straight past that, because I've just talked about that. I'm just going to give you a very quick overview of how we think about things from a credit point of view. And there are different ways of different models. There's the Campari model that's well known from bankers. There's the 5 C's of credit. But what we tend to look at are things such as what evidence there is of the commitment of the business to repay. So, or rather, in that initial credit review, is there anything that might suggest that the business doesn't have a commitment to repay? So it may be that one or more of the directors has a history of failed businesses with creditors not being repaid, or the tax bills being left unpaid. Those sorts of things are likely to be seen very much as amber, if not red flags. We will look at the team, the business as a whole, looking forward to look at the capability and the capacity of the business as a whole. Does the business have the technological capability to deliver? Does it have the commercial capability to go out and win business, win contracts, generate revenues, generate profits? The operating capability to deliver repeatably, reliably a product or a service to customers in the future, such that the business is likely to be profitable? Does the business have the financial capability? Does it have maybe a part-time or a full-time CFO, or plans to have those people in place such that there's a broad management team that can deliver as a commercial business? We're really interested in the markets. being in a position through a defence innovation loan to have a potential customer there, whether it's from a broader defence basis or perhaps specifically around the army, maybe that as a lead customer that can help then with perhaps dual use technologies go into broader markets. That market analysis, the risks around that are particularly important to us. And when we're looking at your future cash flows, where I talked in the past about that sales and cost of sales template, looking at future sales capability, that market, the ability to work with an initial customer, the likelihood of that, the certainty around that, those are all the sorts of things that we will look at, both in terms of the numbers that you put into your spreadsheet, but also the narrative that you put into your application, showing that you have got that strong commercial capability, that drive towards likely ability to generate the cash flows that you need in order to not just repay our loan, but to grow as a business. Particularly interested always in culture, the control side of things. So I mentioned about board of directors, for example. That's a form of good governance. Having a diverse team is really important as well, so that the right decisions are being made. We are particularly interested in your awareness and management, not just of risks in delivery of your project, but also in terms of risks and challenges around the growth of your business, and your awareness and ability to predict and manage and mitigate those risks is really important. And then we will absolutely focus on liquidity and affordability. We'll look at your cash flows. We'll look at those ideas around debt service coverage, where there's a ratio that's required to be met, liquidity, where there's a requirement to be met. We'll look at the overall leverage of your business, the amount of funding that you will have from your existing sources, from retained earnings that you may have, additional equity that you may be bringing in, additional loans that you may be looking for in the future, and looking at the suitability of your balance sheet. So that liquidity and affordability side of things is really important. And when we put that back to the 5 C's of credit that are commonly looked at, we talked about character, that credit history, and the capacity to repay, the capability to deliver as a business, the level of capital in the business. The terms and conditions of the transaction, we're not likely to change in this case. We've set out what those are. We think they're very flexible. We think they're very user-friendly, so to speak. And the collateral side of things, one point I would make is that whilst this is a secured loan, we will take a mortgage debenture over the overall assets, both tangible and intangible, in your business. We will not be placing a particular valuation on that collateral. So from a collateral and a security point of view, whilst we do want to have a senior secured position, our assumption will be that that collateral, if everything goes horribly wrong, probably isn't worth anything. And so we're very different from a lender in the bank market that would be looking very much at the value of that security compared to the loan. So our position around security and collateral is different from that of a bank, because we're a public sector stimulus mechanism, not a commercial lender. Next slide, please. As Himaxi said, the credit committee, of which I'm one of the members, makes the final decision on lending. So if something is innovative and suitable from a DASA point of view, if we looked at it initially from a credit point of view and thought, yeah, that's worth looking at, if we then dug into the detail with you, then the credit committee would make the decision whether to go forward with a loan offer or not. If we do make a loan offer, as Himaxi said, we may ask for a management presentation to validate that potential offer. And if that offer is made, we'll use our standard loan agreement, we'll use our standard security documentation template. That loan documentation it's in a template form, it's standard, we don't expect to change it. But we would certainly encourage you and your lawyers to look at it in detail, because it's a very, very important piece of legal agreement, a piece of part of your legal agreement you'll be entering into as a company. The actual execution is done electronically. There will be some certain conditions that will always be there. We need to have met know your customer and anti-money laundering and politically exposed persons checks. Those need to have been satisfied. And we may impose specific conditions as part of our loan offer to you. We may suggest that certain things have to happen before a drawdown can occur. And often that's been around completing existing equity raises that are under that are in train. And there may be other conditions that need to be met after the first drawdown, but before further drawdowns can happen. Again, sometimes that's been around completing equity raises that have been proposed in the application. We've put in conditions around, for example, completing the hire of finance professionals as a chief financial officer for a business. We've sometimes put in other conditions around delivering contracts or other such stuff. That would depend and would be specific in each case. And you will have to go through the process before you, as you sign the loan agreement, to show that you've got the right approvals, the right corporate authorization, that your board of directors has signed off on the loan agreement and the terms, because they will need to be met. And if you don't meet those terms, unfortunately, then we'd be in a position where we would have to take legal action in order to recover our loan if you default, which is a position we don't want to be in, but we may need to be in. Next slide, please. So just as a wrap up, how defence innovation loans work: if you have an offer and you've entered into that loan agreement, in that availability period, you'll be able to draw down your first amount of your loan that you need once you've signed the loan agreement, satisfied any conditions, given us that formal drawdown notice, and you would borrow quarterly in advance in order to fund that first quarter's cost of your R&D. To draw down further for further quarters, you need to sign off with your monitoring officer in relation to the activities in the previous quarter, show that your project is on track. The credit specialist would sign things off in relation to your quarterly management information, showing that you're meeting those covenants, particularly around liquidity in the early stages. And then you would be able to draw down each quarter in advance to fund the cost of the R&D that's about to happen. If you need to make changes, there's a formal project change request and drawdown change request process that we would go through with you in order to authorize changes from what was originally expected. And that happens. It's an innovation project. Of course, it's likely to happen. During that availability period, as Himaxi has said, interest is payable quarterly in arrears, 3.7% payable in cash based on the amount outstanding, and 3.7% would be deferred, not rolled up and compounded, but simply deferred and added on to the capital amount of the loan to be repaid in the repayment period. In that extension period, after your R&D phase is completed, you'll then be in the getting to market phase. No further drawdowns at that point, but not yet having to make repayments. Paying interest still quarterly in arrears on the amount outstanding, 3.7% in cash, 3.7% deferred. And that extension period would end either on when you had said that it would end, when we'd agreed that it should end, or if earlier, when the first commercial sale from the results of your project come through, if you're more successful than possible. And that's because our loan is for R&D activities, not for commercial activities. By the time you get to fully commercial activities from your project, we expect the repayment to occur. In the repayment period, obviously no further drawdowns, and you would be paying principal, the amount that you borrowed, be paying back the amount of deferred interest that you hadn't paid in the availability and the extension periods, and you'd be paying interest on all of that at 7.4%. And we'll calculate that out so that you have a quarterly level payment. During the availability and the extension period, there'll be a monitoring officer helping you to ensure that your project remains on track and delivers, and reporting to us The credit specialist will be looking at your financial information, and then in the repayment period, it's just the credit specialist that will be looking at the financial side of things. The monitoring would have fallen away because your project will be complete. And by that repayment period, hopefully it's just an annual review process. Typically we'd find that if we were having to talk to you more often in that period, then it's because things aren't going according to plan, and we're having to work with you around how to address problems that you may have in your business or difficulties you may have in making repayments. Next slide, please. Since I'm talking, I'll just carry on if you don't mind, Himaxi. So some basic top tips for the financials. I know a lot of people don't read instructions, but our financials, I would strongly recommend that you read the instructions. We've given you guidance, or there is guidance available around how to fill in the business survey, how to complete the financial template. The instructions are there to help you. I would suggest that you seek financial and legal advice as well, particularly financial advice to help you around that spreadsheet. Please make sure you submit all the parts of the application and all the parts of the business financials, the profit and loss, the balance sheet, the cash flow forecast for the full loan period, historically and going forward. Please make sure your balance sheet balances. It's an important indicator of things being right, and that the balance sheet and cash flow figures for cash actually match. If they don't, it causes us to really ask some significant questions. In your financials, I think it's really important you think about the being realistic and deliverable assumptions, particularly around the sales and cost of sales side of things. So think of things from a top-down point of view, by all means, in terms of an overall market and how much of that is addressable and how much is servable, and what part of that market you may be able to access. But also think about it from a bottom-up point of view. What does that mean actually in terms of customer numbers and the timing of being able to generate those revenues? And please make them realistic. From a cost point of view, please think about all the costs that you need to deliver on a plan. One of the things that we frequently see is really an underestimation of the costs needed. Even if, I don't know, for example, your manufacturing capability in the future may be outsourced rather than you building a massive factory, the costs of that are not just about what are the contract going to cost. From a contract manufacturing point of view, how much will it cost you in order to be able to manage and monitor a significant third-party contractor if you're doing operating what's effectively a virtual company? Similarly, have you got the resources there in order to meet the sales forecast that you're predicting? We find that typically businesses are often underestimating that. And think about sensitivities and stress cases. One thing that we know from our existing portfolio of innovation loans, we've got about 200 loans on our books at the moment that we've been developing since we first started our pilot in 2017. If there's one thing that they all have in common, with maybe one or two exceptions, is that delays have happened. Projects have taken longer than people thought. COVID hasn't helped, supply chain challenges haven't helped, but just the reality of business hasn't helped. So delays have always happened. Revenues are never as high as forecast. I put politely on this slide rarely, but they're never as high as forecast. We're always, we often find applicants are somewhat disgruntled when someone like me says, well, I don't believe you're going to get to those numbers as quickly as you believe, and they're not going to be as high as you think they are. The reason we say that is because we have seen from applications in projects that are actually happening, looking at quarterly management information, that revenues are never as high as forecast, and that costs are almost always higher than expected. So please think about those sensitivities, think about stress cases, think about the affordability of that loan for you. You're the one borrowing, your business is borrowing, so you really should be, if you're a director of that company, acting prudently in the best interest of the company to take on a loan that is suitable for your business, that's affordable for your business, even if things aren't going exactly according to plan A. We will do sensitivity analysis and stress testing within our detailed credit analysis if we get to that point. I hope you're thinking about those things as well and explaining that to us in the application. I'm absolutely a big believer that businesses should have adequate capital. So please think about that in your application, and look at the cash position throughout your loan. And as Hamaxi had said, make sure you submit on time. Where this pilot of an always open is coming to an end in the middle of March, make sure that you are in a position to submit your application well in advance of that deadline. We're looking at things as they come in, which we hope will be better for you. And my final top tip is the same as the first one. Please read the instructions. And if in doubt, ask questions, get that specialist advice that you need. Next slide, please. And I'll shut up and hand over and let Tracy talk about the top tips for the project part of the application.
Thanks for that, Nigel. Very comprehensive run through of what's needed for those applications. So just going to reiterate from the project side of things what to concentrate on. So if you bear in mind that the assessors of the application have about an hour and a half to read your application, aim for it to be done in an hour, and then they can review things. They need to understand, mark and provide feedback on this form to us. So read your proposal and think about it. If it takes you 10 minutes to read through, obviously it doesn't contain enough information. If it takes you 3 hours, it's got too much in. So really focus and be clear and concise in your answers. The right amount of information in there, but not too much detail. If you make an assumption, say that you've made an assumption and why, and give quantifiable and justifiable information, and be as accurate as you can. The assessors will assess two sides of the innovation. We've got the end users that will assess the desirability of it, and we've also got our technical advisors, the majority of which are located within the STL, of which DASA sits part of, and they will be chosen according to their knowledge of the information that you provide, to make sure that they're suitably qualified to assess the information. So you can include technical details in there, and they should understand those, but be clear about any assumptions you've made, and make it clear for anybody else reading it. And as Hamaxi said earlier, don't leave it to the last minute. I know we're running an open cycle on this one, so you can submit that at any time and the process will start. But if you're getting near that deadline, please don't leave it to the last minute. I think in previous rounds, we've had people having technical issues themselves, their internet's gone down, things like that. And I don't know how it will run after the 16th. So, if possible, get it in sooner than that. Just another important point of note: once you've submitted, you can't make any changes. So check, double check, triple check your Innovate application, our application, before you make that submission. And we do strongly suggest that you speak to a member of our team. Like I said, I've got a diary blocks out for the 4th that you can actually book in, but if that's not suitable, you can contact me separately and just have an initial chat about what your application is going to focus on, and whether it is something that would be eligible. More than happy to have those chats with people.
Thank you very much for your time, everybody. Thank you, Tracy, Hamaxi and Nigel, for your talks. We are going to be, next slide, please. Emily. We will be having a one-to-one session, which is going to be led by Tracy. As the dates are there are 7 45-minute slots on the Friday, the 4th of February. Sign up before 12 p.m. on Thursday, but as people have been saying throughout the trip, please sign up earlier rather than later. These sort of things do tend to go like hot cakes. And there is a link there to the Eventbrite page, or you can scan the QR code. So thank you very much for everybody. I would also ask you if you could, if we haven't got a poll going up, if you could actually enter the poll and see how useful it is. So if there is a poll coming up, you could put that in. Otherwise, thank you very much for your time in listening, and we hope you enjoyed yourself. Bye then.